Okay, so I made a video a second ago about some charts and some clear macroeconomic trends that happen on certain days across the whole board of indexes. So I'm going to give it a little bit more context, and we're going to debunk everyone that's pushing Evergrande, like stupid Marco Metzler, dumbass Boss Blunts, and everyone else who follows those types of people. Because, again, they don't know shit. Now, the events surrounding 2019 through 2021 can be summarized very easily. Let's begin. By the end of this video, you should understand why China is just a narrative and why anyone pushing Evergrande is ignorant of the documents and the facts. Macro effect number one, obviously COVID-19. March 13th, 2020. The WHO first declared COVID-19 a global health emergency in January 2020. On March 11th, it announced the viral outbreak was officially a pandemic, the highest level of health emergency. Since then, the emergency evolved into a global public health and economic crisis that affected the 90 trillion global economy, beyond anything experienced in nearly a century. Unprecedented. In a variance of John Donne's poem, No Man is an Island, the viral infection spread between and across countries and affected nearly every community, demonstrating the highly interconnected nature of the global economy. The virus has been detected in every country and all of the United States. The focal point of infections shifted from China to Europe, especially Italy, by early March 2020, but by April, the focus had shifted to the United States, where the number of infections had been accelerating. By April 2021, India, Brazil, parts of Africa and Asia emerged as viral hotspots, with the number of infections and deaths reaching daily record levels. So this was number one. Macro effect number two, the supplemental leverage ratio, otherwise known as SLR. This is very important. So March 31st, 2020, supplemental leverage ratio allows banks to purchase risky assets and continue lending credit for exactly 1 year. So basically, what do? They're allowed to extend credit and they're allowed to buy up as many assets as they want and leverage those assets against their defaulting assets that they have, likely from Archegos, because most of the Chinese stocks that got spun off were due to Archegos. Archegos is a much bigger problem than Evergrande could ever dream to be. Now, regulatory capital rule, temporary exclusion of U.S. Treasury securities and deposits at Federal Reserve banks from the supplementary leverage ratio for depository institutions. This was from the Federal Register. It's a document. You should read it. Macro event number four, China's 3 red lines policy is enacted January of 2021. Man, people that push Evergrande really hate this one because if you read this document, there's no way that what they're saying could be true because they had 5 goals, which included, number one, to control house prices, to manage land markets, to ration credit to the real estate sector, to lower cyclicality, and lastly, real estate developers are systematically important. What do the 3 red lines mean for developers like Evergrande? Forced deleveraging. So now we're going to see what the United States did, because again, this was enacted in January. What did the United States do while China was forcibly deleveraging? Well, the United States was leveraging. They were buying up as many assets as they could. And by the way, the 3 red lines in the China credit outlook, we believe the new policy is a positive market development for bond investors in the long term. From a valuation perspective, we believe current levels are highly attractive in the real estate space. China is tightening up some financing channels after opening them at the height of COVID-19. Coupled with the introduction of the 3 red lines, China's developers will be under pressure over the next 12 months. Yeah, all you dumbasses hyping up Evergrande, this is them telling you that this was going to happen. So again, you should try reading something. However, this is where active managers with a China presence like BlackRock, Fidelity, and Vanguard, and a deep on-the-ground understanding, not YouTubers, of the real estate sector have an edge in capturing the re-rating opportunity. It's a re-rating opportunity. That's literally all it is. Calm your little titties and go read something. 1 month later, Fidelity, BlackRock, and Vanguard, and 1 month later being February of 2021, use the remaining time that's ticking away with SLR being active to leverage retail stocks like AMC, GME, Nokia, BlackBerry, and the others that we saw in January. How do we know this? Because Fidelity bought 458 companies on February 8th, 2021 via 13G or 5% or more of each of these companies. 458 just from Fidelity. BlackRock bought over 4,000 companies between January 23rd, January 27th, and February 10th of 2021 via 13G or 5% or more of the companies. That's a shit ton of companies. And of course, we have Vanguard as well in here, which you'll see in a second. But look at this. This is not coincidence, people. This was all planned. All planned. I mean, you can cry and whine, but Marco Metzler has no fucking clue what he's talking about. Boss Blunts has no fucking clue what he's talking about. So why does he keep talking about it? He wants to steal your time and money. I mean, I'll keep saying it until it's beaten into your head enough that you understand it. Now, that was BlackRock. I guess I didn't put Vanguard in there, but Vanguard bought over 2,500 positions. But you get it. BlackRock, Vanguard, Fidelity all bought up an astronomical amount of positions via, not 13F, 13G. That is 5% or more of each of these companies you see. Look at the share counts. Ridiculous. Okay, so obviously if they bought up all these positions like that, we should see effects of it on the broad indexes, right? Well, we do. Check out the Shenzhen Composite, which is the Chinese broad index on the 4 dates that we just saw where the most positions were bought. February 2nd, January 23rd. Now, this is what's interesting. BlackRock didn't start buying positions until January 27th. There was no trading between January 23rd and February 2nd on this index. So, literally, the time in between is when all these assets were bought. We have a huge gap down, followed by an instant uptrend. February 10th, right there. February 12th, right there. What happened during the Dow during this time? The exact opposite. Once BlackRock bought theirs, we got a dip. Then come in BlackRock and Fidelity. And then what happens? The entire market falls off of a cliff. And then SLR ends right here in April of 2021. So again, to reiterate, China, 3 red lines policy starts in January. They expect 12 months, which by the way, that is up next week. 12 months of forced deleveraging. So at the same time, the United States is forcibly leveraging, and then everything falls off a cliff. But what saves it? What could have possibly saved it? This is April 1st. This red line here is April 1st. What could have saved it? What could have saved it? Because we were headed towards hell right here. This should have been it. What saved it? Well, the Federal Reserve on the 19th of March announced that the temporary changes to its supplemental leverage ratio will expire as scheduled on the 31st of March. These changes, which were implemented last year, aim to ease strains in treasury markets resulting from the COVID-19 pandemic. So basically, you can pause and read this if you want. Go ahead. I mean, you cannot deny this shit. So let's look at what happened April 1st, 2021. Remember, we did not have a SEC chair by then. Gary Gensler didn't come in until Saturday, April 17th. That's what happened on April 1st. The freaking repo market comes in, takes the place of SLR, and the infinity loop begins. All that leverage they just got, now they can just repo it and rehypothecate it until they're ready not to. So AMC, GME, the reason why they're going down and they will continue to go down is because they're being deleveraged just like the Chinese stocks were. Now we have a bunch of GameStops sitting around in China and everyone's saying, ew, China, because the fucking media has everyone by the balls, and it's, it is what it is. But, yeah, this is basically what happened. Deny it, accept it, the choice is yours. Yin yang, baby.